An income statement is a financial statement that shows you the company income and expenditure. It also shows whether a company is making profit or loss for a given period. The income statement, along with balance sheets and cash flow statement, help you understand the finance health for your business. The income statement is also known as a profit and loss statement. Who use an income statement? There are two main groups of people who use this finance statement: internal and external user. Internal user include company management and the board of the director who use this information to analyze the business standing and make decisions in order to turn a profit. They can also act on any concern regarding cash flow. External user, they have T type of user. First, investor. They check whether the company is poised to grow and be profitable in the future, so they can predict whether to invest in the business. Second, creditor. Use the income statement to check whether the company has enough cash flow to pay off its loan or takes out a new loan. Importance of income statement. An income statement helps the business owner decide whether they can generate profits by increasing revenues by decreasing costs or both. It also shows the effective of the strategy that the business set at the beginnings of financial period. The business owner can refer to this document to see if the strategy have paid off. Based on their analysis, they can come up with the best solution to get more profit. The three other things that income statement inform. First, frequent report. While other financial statements are published, the income statement is general either quarter or monthly. Due to this, business owner and investor can track the performance of the business closely and makes informed decisions. This also enable them to fit or fix small business problem because they become large and expensive. Pinpointing expand. This statement highlightly the futures expand or any expected expend which are increased by the company and any area which are over or under budget. Expenses include building rents, salary, and other overhead costs. As a small business begins to grow, it may find its expense so. First, overview analysis of the company. This statement gives investors an overview of the business in which they are planning to invest. Bank and other finance institutions can also analyze this document to decide whether the business is loan worthy.
Of the restaurant in this period with the sales. There are three parts of sales. The first one is food. The first sale, including the sales of meals, soft drink, juice, and other non-alcoholic beverage, which the sales is 20,500. The second one is beverage. Beverage over here, we refers to alcoholic beverage. And the sales for the beverage sales is 32,500. And the last one is merchandise and other. This one, we refer to the sales of miscellaneous items. For example, is our t-shirt, our cups, or our limited edition dish and candy, or our gift items. And we can earn 2,500. And then when we total all of these sales, we will get the total sales, which is 55,500. And then to get this percentage of the food sales, we can use the amount of food sales, which is 120,500, divide by the total sales, which is 155,500. After that, multiply by 100. You will got the percentage of the food sales. And then in the same way, we can use this formula to find the percentage of beverage and merchandise and other. And when you total all the percentage, we will get 100%. So the next one, we will move to the cost of sales. The cost of sale over here indicates how much our restaurant spend on food, spend on beverage, and spend on merchandise and other to sell them. How much we spend. For the cost of sales, to sell food, to sell beverage, and merchandise and other, we also have cost to sell them. So the first one, we will start with cost of food, or we can call as food cost, that we spend 41,000. And the second one is beverage. The cost is 8,500. And the last one is merchandise and other, which the cost of them is 1,000. And when we total of these three parts, we will get the total cost of sales, which is 50,500. To find the food cost percentage, we can use the amount of food cost, which is for 41,000, and dividing by the revenue of food or the food sales, which is 120,500. Multiply with 100, and then we will get the percentage of food cost, which is 34%. And we can use this idea to find the beverage cost percentage and merchandise and other cost percentage. For example, if we want to find the beverage cost, we can use the beverage cost, this amount, which is 8,500, dividing by the beverage sales, which is 32,500. And after that, multiply with 100. And then we will get the percentage of beverage cost, which is 26.2%. And for the merchandise and other cost, we can use 1,000 dividing by 2,500 and then multiply with 100, and then we will get the number of percentage of them, which is 40%. Calculate about the total cost of sales percentage, this number. We can find this number by use the amount of cost of sales, which is 50,500, and then dividing by the revenue. The total revenue is 55,500. So we can use this number to dividing them. And after that, multiply with 100. We will get the number of percentage of the cost of sales, which is 32.5%. For labor cost, we also have three parts of them. The first one is management, which is the cost is 12,000. The second one is staff. Staff cost of our restaurant is 27,500. And then the last one is employee benefits, including meals, insurance, and public transportation for the employee. We have the cost of employee benefits is 7,500. When we total it, we will got the total labor cost at 47,000. To get the percentage of the management cost, we use the amount of management cost, which is 12,000, dividing by the revenue of our restaurant, which is 155,500. Time with 100, we will got this percentage, which is 7.7%. 7.7% is the management cost percentage. We can use this idea to find the staff cost percentage by using this amount of the staff cost and then dividing by the revenue and then multiply with 100, we will got 17.7%. And then for the employee benefits, we can use the employee benefit cost, this amount, 7,500, dividing by the revenue, which is 155,500, and then multiply with 100, we will got the number of this, which is 4.8%, which is the percentage of employee benefits cost. And for this one, we total it. We total all the cost of labor, and then we will get this percentage of the total labor cost. And then for this line, we want to show about prime cost. Prime cost is the total cost of labor add with the total cost of sale. Cost of sale, which is the total labor cost we can use this amount, which is 47,000, add with the total cost of sale, which is 50,500. And after we add it, we will got this number. We can use this idea to find the percentage of prime cost also by add the percentage of total cost of sales with the percentage of total labor cost, and then we will get the percentage of prime cost, which is 62.7%.
Hello everyone. Today I'm going to introduce other uncontrollable expenses and controllable income and non-controllable expenses, and how can we get those numbers from the chart. Okay, so first, most of the expenses in the other controllable expenses section have a bearing on the service and quality of amenities provided to the guests. Okay, like direct operating expenses, like transport, food, and supplies, and music in an entitlement. They need to get some like license associated with the music, video, and the television service provided by the property, and the marketing. So for the marketing, it's include the older advertising expenses, including like radio, television, okay, and other advertising approaches like website, gift card, newsletter, something. And next one is utilities, like utility service like gas, heat, trash, water, and so on. Okay, and next one is general and administrative expenses, but this one is not directly associated with the guests. Okay, so it's like a kind of like a claim and damage paid, insurance, personal expenses. Yeah, this one is this kind of the expenses are not related to the customer directly. And the last one, of course, we need to like a repair and the maintenance costs as well. Okay, so like the repairs of the maintenance to the operations, building equipment, and grounds, sometimes like something like this one. And next one, what is a controllable income? So okay, so controllable income identifies the income and the expenses that the manager has the power to influence or manage as a part of to the long-term expenses. So the first one is it's familiar. So starting with the sales, and when I get all the sales total sales, we deducting the prime cost and other controllable expenses. So later I will show you how to calculate in that chart. Okay, so move on to the next one, non-controllable expenses. So non-controllable expenses are primarily fixed expenses. They are not influenced by the sales value. So it is fixed. Okay, this one is fixed expenses. Okay, for example, like occupations cost, like rent, Okay, real estate tax, insurance, okay, equipment list like kitchen equipment, host systems, computers, okay, and the duplication of the building and furnishing and the equipment. And the next one is monetizations. Okay, so this of this hold improvements and some and pre-opening costs. So they are non-controllable expenses. Okay, so now the number how can we get this number? As we said, okay, so we always said sales. So how can we get the total sales? Okay, total sales. Okay, in this chart, we need to plus like, okay, prime cost, total controllable expenses, and the total non-controllable expenses, and the restaurant operating income. So we need to plus 4 numbers. So it is the total. Let me check. All the total is okay. 100. That is total sales we get. So as we said, how can I know? How can we get the controllable income? Okay, we go back to the formula here. We already know the sales, but now we need to deducting prime cost and the controllable expenses. So we go back here. That is total sales we get and prime cost and the controllable expenses. So the number we get is same. The same as the chart. Okay, so now we already know the controllable income, how it comes from, and what about here? Some the percentage. Okay, like percentage here. How can we know it? So, for example, we are going to talk about like okay, total non-controllable one. So it's percentage, right? Okay, so that's a formula, right? And it's around 8.6 8% something, so it's around 8.7%. So yeah, it's correct. Okay, so that is how we get a number. Thank you so much.
Hello, everyone. So I will finish the rest of the income statement. So let's go to restaurant operating income. What is actually restaurant operating income? It is controllable income less non-controllable expenses. So let's go to controllable income here. So our controllable income is 26,350 and our total non-controllable expenses are 13,500. So if we want to calculate the restaurant operating income, the formula is to minus the controllable income and non-controllable expenses. So here it comes 26,350 minus 13,500, which gives us 12,850 as our restaurant operating income. Next is restaurant operating percentage. Restaurant operating percentage is the income that we calculated in the first part divided by total sales. So let's go to our table. So here our total sales are 155,500 and our restaurant operating income is 12,850. So our percentage comes to 8.3%. Next is interest expense. Interest expense is interest paid on the loans, mortgages, and bonds. And then there is another category, other income expense. This category is used for income expenses that are not part of normal business activities. For example, gains or losses on assets and gains or losses on the investment. So if we go to the table again, our interest expense here is 400 and other income expenses are 350. So how we calculate the percentage, it's the same way we calculated restaurant operating income percentage. We're gonna divide interest expense by total sales. So it's 400 divided by 155,500, which gives us 0.3%. And the similar way, other expenses come to 0.2%. Next is income before income taxes. It is calculated by adding together restaurant operating income and other income, then deducting corporate overhead, interest expense, and other expense. So let's go up. Our restaurant operating income came here 12,850. We're gonna minus interest expense, that is 400, and minus other expense, that is 350. So which gives us income before income taxes as 12,100. So income before income tax percentage is 12,100 divided by 155,500, which gives us 7.8%. Next is income taxes. What includes in that? It includes federal and state income taxes. And in this slide, our income tax is 3,500. And let's calculate net income from this. What is net income? It is calculated by deducting income taxes from income before income tax. So our income tax is 3,500. Our income before income tax is 12,100. So net income is 12,100 minus 3,500, which gives us net income as 8,600. Net income percentage is net income divided by total sales, which is 8,600 divided by 155,500, which gives us 5.5%. And that is the end of our restaurant income statement.